So as of today, they've just approved a Bitcoin ETF based on the futures contract. That just means that a lot of people who have accounts, brokerage accounts to buy shares, can now buy Bitcoin that way. So it's really easy. So everybody with a Robinhood app or a TD Ameritrade or a Fidelity can just go straight on and buy it. Because those people were nervous about, how do I buy Bitcoin? How do I store it? I don't know what a wallet is, and all of these things. It makes it really easy. It also makes people like the investment advisors, which is the people who advise everybody on their money and how to put it. It makes it easy for them because it's now regulated and straightforward. So they're going to be telling their customers to put it into this fast-moving asset because, you know, it's up 100% this year and Ethereum's up 400% this year. So they're going to say, listen, we should be investing in this asset. So that's going to put a lot of new money in. Then the pension funds and the other institutions are also learning about this and have been investing, and that's going to keep going. So we've got not much new supply of coins coming. Lots of people putting it into storage, as we talked about, keeping it for the long term. And so there's not a lot of Bitcoin available to buy. And if you bring in all of these buyers, too many buyers, not enough supply, means the price goes up a lot. And it's as simple as that. And with Ethereum, you've got another game in town, which is it's transitioning to something called proof of stake. And so it's called ETH 2.0. That Ethereum 2.0, to secure the network, you stake, i.e. store your Ethereum, and you get paid to do that. So everybody is currently taking their Ethereum off an exchange and staking the network. So all the Ethereum is off the network right now, and demand growth from NFTs and everything has gone explosive. And there's probably going to be an ETF, and the institutions are all starting to learn about Ethereum. So again, it makes it almost no supply and ludicrous demand, and that only means exponential price rises. Two things I would do. One is learn as much as you can. So if you guys are interested in crypto, Real Vision's got a free crypto channel that interviews everybody. So if you're interested in the metaverse, or you're interested in NFTs, you're interested in Bitcoin, you can find all the most amazing people in the world are basically teaching you about it. And then the best way is to start. What's the easiest way? You can probably just buy it on PayPal or Square Cash App. So most people have got PayPal. You've probably got a few bucks in your PayPal account. So stick $10 in. Just see what it feels like. What does it do? Does it go up and down? What does it do to the money? That's the way to do it, is educate yourself, but also get your toes in the water and just get to understand it. And then over time, you'll be thinking, oh my God, it's fallen a lot. First, you'll be scared, and then you'll be thinking, actually, it's probably going up a lot over time, so I should be using this opportunity to stick another $5 in. You know, it's how you learn to do things. You have to learn what your own psychology is like. Are you a panicker when the market goes down? Or are you the patient investor that wants the market to go down to buy it? And that's all okay. Different people have different styles. You need to learn your own style of investing. You know, how good at you? Do you think of the long-term opportunity, or do you think Bitcoin's going to go up this week? Then you invest accordingly in how you see things.
Ethereum might be by the end of 21.
Yeah, and it sounds a bit crazy. I mean, I think Ethereum gets to 20,000.
Really?
Yeah, I think it gets to 20,000 by year end, and it might go even as high as 40,000 by March of next year. Don't know, but 20,000 seems really, really possible to me.